Alright guys, back with another awesome video. I am going to be here for quite a bit. I have a couple of hours to kill before I have to go. So let's rock and roll. Sorry, you guys. Just trying to do terrible at multitasking here. So okay, I'm gonna put some chat up just in case there's any burning question. Can roll. Oops, sorry. Sorry. Oh, that was me. Um, I'm sure there's a better way to do this, but currently, this is what we got. Okay, you got what you got. Hi, Gabe. What's up? Let's talk GameStop. All right, what's up? I've never seen you here. So what's on your mind? Let me set this up real quick though. All right. So, welcome. Glad you're joining. Okay. So, hi. Are you investing in GameStop, or oftentimes some people come here usually are, GameStop hater, by the way. So I just want to know where you are at the moment. This is Gabe A. Oh, Gabriel A. Oh, I recognize that name for whatever. Long time. Okay, so you're a friend, not a foe. I thought I'd have to like bring my boxing gloves on, It's like I was getting ready. Welcome back. Hopefully everything's going well with you. Yeah. What's happening? What's happening? Yeah, not much, nothing changed. The company is still shitty, as everybody is telling you. So don't worry about it. But I'm glad you're coming back though. That's amazing. So good. Okay, so as you see the price action, hold on, let me see. I know I always bring this up, obviously. The chart is, everybody's seeing it a million times already, but it's beautiful to me. It's beautiful. Okay. I'm just playing with different indicator here, just to learn about, different things. And this one is like smart money, um, smart money, what is it? Oscillation. Oh, what is it? Am I spelling this wrong? I mean, saying this wrong. Last time you were okay. I was here. It was at 1T. Exactly. That's good. I hope you scoop up a whole bunch of a share. That was amazing, right? Like I was hoping that it was gonna come down to that level, and again, that level is very critical. I mean, if you see the chart, um, because it's interact with that level for a long time, was a support for a long time, and then it breaks down, and then we stay under 20 for a long time here. But so this is a critical support. Anyone who know how to trade, I guess, could see that. I'm not an expert, but I could kind of like, okay, simple support and resistance. It's only math here. So where would it go from here? I mean, I'm looking at this level being breaking through this level. Of course, we're still working on 30, but I think we're gonna slice through 30 like anything, like butter, in my opinion. I mean, we're pretty close to that, right? Oh, good. I hope you have enough. For me, it's never enough, never enough. But I've been dabbling with crypto back again. I don't know if you know this, but for me, my original, I guess, like my origin was from crypto, right? So of course, crypto cycle is back. So I'm kind of a little bit more focused on that one, but I already have my moon back in GME. Of course, I'm also kind of keep track of it as I go as well. I am currently I have one call option, just to play the market. if it spike ever again. If it's not, again, I'm just doing it slowly right now. Long-term investing and all that stuff. And this is kind of like segue to the video that I'm going to go into. I was kind of listening to Roy and Kitty way back when he used to do his live stream and all that stuff. But I'll go through that in a minute. It's going to be a long show today. So don't worry if you don't want to stay too long or anything. You could always go back and watch it later on. But I do appreciate you coming in here though. And by the way, so let's kind of go through the price level here that I'm expecting for next week. Of course, everything is, I guess it's a OPEC cycle, right? For this week. So expecting volume. But I also keep in mind Roy and Kitty tweet as well. Perhaps that little time frame that we were looking at is January 9th, right? Again, just a tweet. Theoretically, perhaps this is what he's trying to tell us. Tinfoil hat here. So from this time period to this time period here, April 20. Perhaps this is what we're expecting, that maximum value of volume coming in within this time frame. Because again, there's a lot of enthusiastic, we're cutting close to breaking even in terms of operationally, right? Again, I'm talking about the company here. I'm not talking about the price action people, so be careful. Again, it's important to distinguish the two, because again, people just muddle the two, and then they don't understand why is GameStop trade at $1,000, and then the news media come in and say, oh, it's nothing to do with fundamental, it's all retail here, and those crazy people, right? Whatever. But yeah, so don't be too bogged down on that. What I'm trying to say is the company is doing well. We are expecting, better and better balance sheets here. We're expecting a full fiscal year of full profitability. So again, that could ensue a whole bunch of enthusiastic, and perhaps this is what he's trying to warn us, right? That look out for the volume. Volume is coming in. Don't be disparaged because the price doesn't do something that you expected. Sometimes, I'm kind of like, go ahead of myself here. He was saying that sometimes it takes a long time for the market to come across this, or to at least factor in and all that stuff. So, but anyway, I'm getting ahead of myself here. So let's take a look at the expectation for this particular earnings report. It's at in March. So this is the full fiscal year one that we're all looking for, to see what this particular income is going to come to fruition for. Currently, this is the trailing 12 of this year, and look at this. Like, again, people forget, I feel like, that GameStop actually have a net income here. Yes, I know people would love to have this discussion on how, oh, this is just an interest on interest. They're not doing anything. Okay, well, if on the basis of interest alone make this much money, so what? They're making money. Money is money to me, right? At least it comes from interest and not comes from, some shady business dealing here. Okay. So marketable security is the most kosher thing to have in your balance sheet. It's not like they're scamming people to get into this position or anything like that. So people are willing to buy this company at this valuation, whatever valuation they paid for. Jimmy was able to sell their shares at $28 on average in one of the offerings. Some offerings, people are willing to pay $20 for it, right? So again, that's the free market nature of things. So again, it's the most valuable thing. Okay, 10x, exactly. Get ready for 150. Okay, 150 interest a year. Yeah, I mean, look, even right now, if you were to look at the, like right now, it's already trailing 12, $123 million already. And so, it's very easy for us to come up with this number. And again, that's just interest alone. Like that doesn't even account for the business itself. I know the media would love to just have people believe that GME doesn't bring in any money from their actual core business. That's BS. Look at this. Okay, sorry. Is it mine? Okay, sorry. Quarter four. Quarter four is the best quarter that we had back in last year, right? So it's very easy for us to say, okay, at the very least, perhaps they could make $100 million extra. No. So if interest payment is 150, can we do $250 million? Or at least how about $200 million? Let's just say they're doing terrible for the next quarter and only bring $50 million. That's $50 million extra on top of whatever we're making through the interest. Again, this is why people, I don't think, I guess what is my, I lost my train of thought, you guys. I'm saying that people who are not looking into this honestly and who just listen to the media is going to miss out big time. So that's what I'm saying. Sorry, I can't even. The number is just too vast for me to even grasp. So yeah, $250 million easily per year. Coming, again, the next year. Okay, I'm not talking about this year alone. I'm talking about next year. So this year, if we were able to add anything that we made in quarter four, it will be added to this right here. So more and more net income. And then a year after that, that's when we could expect $250 million, right? Hopefully we don't have World War III on our hand and people are just dropping nuke everywhere. Knock on wood, please. Please don't have that happen. But, aside from that, we're doing fine. And I think, Brian Cohen's going to continue to do what he knows best for the company. And do you think we're going to just stop at PSA? Come on. I'm sure we're going to have a lot more on our arsenal in terms of, just selling anything. So it would be good. But again, so this type of narrative, they're grasping at straws right now to say that, this company is anything but great. Just be careful again. Don't listen to anyone. But anyway, so I'm looking at a. So let's get to the meat and potato of this live stream. I was originally wanted to kind of react to, a couple of segments. I know this live stream is so long right now. Look at it, 4 hours. So I'm not going to take all 4 hours or anything like that. But there's a certain segment in this live stream. And I'm sure if you're a big fan of Rowan Kitty, everybody's need to sit through this live stream and see the thought process that he had before Gamestop. And so this is going to shed some light on how, and nothing changed. When people are telling you Ryan Cohen doesn't have a plan, go look at this letter right here. That's the plan, and it's still in place. That's what he's trying to achieve right now. Have we achieved everything? Not yet, but most of it is already in play right now, 4 years. And still many years to come, because we're trying to achieve the ultimate destination for gamers. Okay. So we haven't gone through the technology aspect of things yet. And many more years to come. And so for those of you who listen to the media saying, oh, he has no plan, well, don't listen to them. Go straight to the source and see what happened. And again, he's not going to tell you on the earnings call. He's just going to drop the earnings report and give a brief statement, on the annual meeting. I'm sure he's going to prepare a brief statement, and that's it. That's it. Now, mic drop. If you like the company, invest in it. If you don't, okay, you go your merry way type thing. I like this type of leadership because at least they're not embellishing anything, They just give you what they are capable of doing, and then they show you with the result. So, yeah. But anyway, so let's look at, can I speed him up? Yeah, a little bit. I know, because I'm very slow at talking. Maybe I should. Hold on, let me see.
Aggressive. That's the thing. We know Cohen's been involved for a while, and now's the first time we're getting that letter. Getting this letter, kind of laying out a lot of the stuff that he wants them to do, but they are doing, right? We trumpeted the urgency factor, wherever that is. That was something that stuck out to me. But you know what I mean? Like some of the things he's recommended they do, they're doing. So he must at least they must be somewhat in the same ballpark. That they have to be, because what other conclusion could you draw when Cohen's listing stuff that they're doing? They have to be in the same ballpark or strategy. And maybe it's marginal things he's disagreeing. And specifically, what he's looking for is kind of like a roadmap, right? But as far as the bullet points go, I think, all right, well, they're doing a lot of that stuff. So at least in the same ballpark. So we know he's not completely happy with everything, perhaps. But how much is it? I mean, it could, like the urgency. Well, let me keep going. Of the flat. So Polygon, this is a good point. So if I'm talking about management team, I'm always talking generally, just to be clear. So Polygon talking about this weekend stuff where they kind of dropped that news on folks. No one was really prepared for it. I'm not condoning every single thing or saying they do everything right. Certainly not, Polygon. I know you know that. But just the general approach to their situation, high level strategy type stuff. I'm speaking to that type of stuff. No, that's the thing. So Super Saucy says, 2 transformational plans that management has talked about in detail. Well, just to give a couple, just their general approach to omni-channel. They got the revamped app, the same-day delivery, the different types of that, like just omni-channel generally, and then, of course, the Microsoft type stuff. But I'm with you, Super Saucy. That's not enough for me. I've said that many times. If I'm seriously going to model that upside optionality, I need more. All I'm saying is besides literal, I would say, Super Saucy, that they are executing in some of those omnichannel fronts, right? We can see the growth in omnichannel, and yes, I know part of it is the increased demand because of the closures and COVID type stuff. I understand that, but the omnichannel type stuff, the Microsoft type stuff. But I've said that that's not enough for me. But just because I'm just saying that just because it wasn't announced on Q2 or even Q3, I just think if you knew you had the nuts. Right? How do you approach that strategically? This is my question to everyone else. I'm open. I'm keeping an open mind here. I think some people they say, oh, they didn't announce anything just yet, so boom, they don't have anything, they suck or whatever, and that could be. But can we at least assign a probability to the opposite that they do, and they're approaching this in a different way? I know people might take issue with the timeline, right? Even I myself thought we'd have more by late 2020, but I just think it's a mistake to go too far in the under direction. It's like everyone's like, I got to go that way, and the Cohen letter is arming them with that ability to do so.
This is still relevant till today. I'm telling you, like people want GameStop to leaps and bounds. Like, oh, they should make a rocket already. Like, what? It's a retail company, and people were like, they should have done it, they should have done this, they should have done that, without realizing it takes time, people, I don't understand this sometimes. But then again, this is what creates opportunity for me to be like, okay, let me just be a sane person and then just put money wherever I think, it's going to make sense to me, right? To buy at whatever price. And then again, when I said whatever price, people are like, what do you mean you buy any whatever price? Yes, like consistently, because I don't know how low it's going to go. I don't know how high it's going to go. Let me just average down. That's it, right? And again, the best investing advice that I usually get from is from Warren Buffett, right? And my own experience as well. As you know, I invest in Bitcoin originally and then come back to stock. But again, the fluctuation that happens in crypto, help me prepared for this for this fluctuation in GameStop. So in the stock world, a stock that fluctuate in 20% at a time, it's a shocking thing. Well, before GameStop comes along, but now it seems very, very likely. Even Broadcom just posts a freaking 20% a day because of what earnings? Like I was gonna go in now, but this video is gonna take too long. But my point is that it takes some time to get to where we want to be. But just rest assured that the company is doing well.
Now, again, I've called out their storytelling stuff. It leaves a lot to be desired. And like I said, I was disappointed in that Q3 cut. I'm like, dang. I was even said like it was like so not even what I was looking for on that upside. Like, wow, it wasn't even close. I just think, but I'm like, oh, but then they do the at the market, and I think, okay, hold on. Part of the offering plan they didn't expect. Seeing one side of the we're seeing only one side of the history, but maybe the part has a plan for this. That's part of the offering plan, but they didn't expect. Well, that's the thing. So the at the market type stuff can have usually markets they're like sell off, and because a company that like GameStop that is in a current position, people are look at the short interest, right? People are betting against this. They still think bankruptcy and then it's going up. All the risks that are up against, which are legitimate, right? But when you compare that to say Tesla's, when you compare that to Tesla's at the market offering, no one cares. Like, oh, growth, tremendous upside, blah blah blah, right? When you just compare those two, people are it's framed differently because of their how they view stuff going into it. But it could serve very similar purposes. Maybe people are gonna laugh at that, but I just think that they can be opportunistic. And it's just so funny that you got a Tesla one, you got a Tesla one happening around the same time, and of course, didn't the stock go green that day that they announced it? And I just think it just depends on how people are viewing it. And I think that the knee-jerk reaction was they're like they need it. It's real pessimistic and blah blah blah. So I agree. Yeah, Gat's talking about Cohen things. Pretty strong word. I agree. Strong words. They were strong words. I don't deny that. There's a timeline now. He's incentivized to move. I agree with that take as well. And I think everyone's incentivized to move quickly. It's not in anyone's best. Remember, Cohen is the largest investor, like individual investor in GameStop. He doesn't. Yeah, this is an ad. If he's serious about this and he strongly believes that maybe it could be improved or things could be vastly improved, I don't even know what involvement he wants. You know what I mean?
So keep in mind, he bought this company. I'm talking about Keith Gill here. He invested in GameStop before Ryan Cohen got in, and this is why he was shocked that this is the whole discussion. And so this is what people don't realize, that the reason why the stock price went down 20% following earnings. You see this? 20% following earnings every time, right? Again, just price action here makes no sense. The point is that the catalyst that comes after that, the one that we saw on the news, was because of Ryan Cohen. This is the biggest catalyst of them all that they don't want you to even hear about, right? The only thing that they want you to hear about is that Roaring Kitty is the guy.
He would want to move.
He's a pumper, he's a dumper, or whatever. Like, makes no freaking sense. Now, if you understand this particular investment based on this whole history, then you're not going to be, sway either way. Because again, this is the truth. This is the truth. And the investment is still there. Again, the legitimate people, successful people, wants this company to be successful. Okay, I'm talking about the management side here. Keith, he just saw the opportunity and he took it. Okay, and he's a smart trader, smart deep analysis and all that stuff. So, understand that. He's not a dummy, okay? And he took time to, come to had it live stream and have the rest of us kind of like follow along, learning how to evaluate the company the right way, yes, it's his way of analysis. It's deep and it's long, hours and on and reading and discussing the possibility and all that stuff. So, and this is what I love about Keith Gill in terms of like doing analysis on the company. I'm a bit lazy sometimes, to read all of the articles. So this is a very good avenue for me to get to to at least hear somebody talk on a video about something that I'm interested in, right? And GameStop just came to my fruition because of the whole media craze thing. But then it evolves into, okay, let me look into this myself, because I know the version that the media is telling me, but let me go through it myself. And this is why I'm doing what I'm doing, so
Management team they could put it behind them, and that would be bullish. That was what I said. When I think I tweeted it with the stream, I was like, the best case, that'd be the optimal scenario if they came to a quick resolution. Okay. As long as these things, the management was adopt some of I think some of the ideas were better. So yeah, okay, Jordan, look at Jordan say, okay, Cohen isn't satisfied with management, but as long as he is staying and interested, the management will listen and adopt some of his ideas. I think some of his ideas were present in Q3, and I agree with you, Jordan. You know what I mean? Like, if you had told me, if we had to assign a probability that they were going to do an at the market offering as part of this, like, wouldn't we all assign a very low probability to that? I think, whoa, if you were, and we've said this for weeks and months, if they were serious about a major turnaround, you need more cash. This is a way to get more cash. And I just think, holy shit, are they really going for it? And that was why you saw me say last week, I mean, why not have the at the market be even more? Because then you could go even crazy. There's always the option for that, right? But I just mean, holy shit. And they're increasing the speed at which we elevate and expand. I forget sometimes the words get increasing the speed at which we elevate, expand our omni-channel strategy. Isn't this largely what Cohen is? So cheers to Jordan. I think some of the ideas were there too. I think that too, Jordan. And again, we don't have to say that. I just mean, can we entertain it? Yell at me. I'm just trying to, let's talk about it. Let's discuss this. And I'm like, I kind of get where Jordan's coming from, because I kind of agree with this. And this is why I'm surprised that everyone's like not even willing to think, not even willing to like assign any probability to this. Zero. And I just think, zero. No one explicitly said that, right? But kind of the sentiment I'm getting out there, I'm like, whoa. Oh boy, EO. Feel like EO, cheers. I forgot it feels like that at the market. Yep, I do mean at the market. Sorry, El. Sorry, my bad.
So let's talk about like the raising money, the initial what is it, the at the market offerings that they were doing. But they were able to raise like $1.6 billion, and that what's helped save the company. And so the more recent offerings that we had recently are more, again, to expand the whole vision, even like accelerate it. And we're here already, and people are ups in arms about it, honestly, like, again, without understanding that this type of offering is an opportunity, it's a strategy moving forward. Okay, it's much better, it's much easier to raise money than actually making it. So if you have the ability to raise money on the front end, 0 interest rate, and not on like, you don't have to be beholden to the banks or whoever wants to buy you out, because the public doesn't give you that opportunity. Like Adam Aaron, for example, his at the market offering doesn't incite people to buy his company, because his company doesn't hold any more water, like GameStop, right? While GameStop, there's actual, institutional investors over here who's trying to accumulate as much as they can, right? Whether they have to buy it at a higher price because they were shorting it initially, or they're just organically thinking, hey, there might be something here, right? And so that's why, again, I don't understand why these, media, well, I do understand why they're pooping and scooping like crazy, saying that GameStop doesn't have anything to look into. So don't look into it, right? Look in other stock for now. That's what they're saying to you. So yeah, so the at the market offering, I think, he went through. Let me skip a little bit here.
Auction, of course, but generally, when you buy back over a 30-year shares at a $5 price point, and now we're looking at a where it is right now, they were at least they certainly weren't poor. I would disagree with that. Danny, cheers! Happy Monday. Hope you had a good weekend.
Oh, this is Monday.
Yeah, a few more grays. Ain't that the truth? Ain't that the truth? Okay, so Steve, the poorly timed, the debt redemption. So number one is they should have done that debt redemption. I was thinking that they would do it late last year. So I agree with that part, Steve. Once they didn't do it late last year, I think we can all agree they got they look what they ran into, right? Look what they ran into with COVID and everything. Right at the time that they were trying, based on when they closed it up, June and July, it was clearly it overlapped within when they were attempting to refinance, and so it kind of
that's the danger of any companies, right? If you are indebted to some institutions and all that stuff, and you need to refinance it because again you need the money, you don't have the money to from your business type or whatever, and if anything goes wrong with the economy, COVID time, then your company's going to go under. It doesn't matter how much brand you already, built back in the day. Doesn't matter. You're going to go under just 1 year because you didn't prepare for that downturn. Okay. And so this is why leadership right now, we are preparing for the downturn. Even though we're successful already, meaning we don't have any debt, we're still preparing for the downturn because we want to set ourselves up for success when the time comes. And so the logic that people are having in this company, I don't think have the logic that the media is trying to get people to see about this company is the wrong way to look about things. And again, they want to misdirect you. I'm telling you, the trick that these people are employing is because again they don't want the masses to get the best quality companies. They want you to get the best quality companies that are already expensive already, hundreds of % up already. And that's why they're cheering you on to buy Nvidia. Only Nvidia. Oh, look, 20% up. Oh, look, 80% in a year. Oh, look, it's going to go higher. It's even higher. Okay. Yesterday, this guy was in the media, was trying to kind of like, oh, if you want to gamble, don't gamble in GME, gamble in Nvidia. There's a reason why, and of course they pushing you to go to the meme coins out there too, right? What is it? The fart coin. Fart coin was on the news, and it's ridiculous sometimes, I feel. There's a reason why they cover it on the news, right? There's a reason why they cover Doge on the news. Now, there are legitimate cryptocurrencies out there. I know we feel a little bit different here. In the world of crypto, there is a legit, projects out there who's trying to, bleed in between the blockchain to the real world. There's a real world use case out there, so you have to go in and search for yourself, right? To me, again, this is a good technology. It's a technology that you should be paying attention to because it's useful in some way. Just like how the internet was not widely understood back then, but we know, the people in the know knows the use case for it in the future. And it wasn't until 40 years later that we're seeing the internet that it is today because people have to build on top of it. The same way with Bitcoin, the same way. Bitcoin is the layer 1, Ethereum layer 2, or Ethereum and XRP is layer 2. And then there's a third generation coming, smart contract and all that stuff. And then, yes, little by little, people are going to build on top of it. So that's where the value comes from. I know, kind of off topic, but my point is, it takes time for this type of thing to play out. But as long as you kind of educate yourself a little bit on the investment that you have on your portfolio, just be, fair about it, right? Just like Rowan Kitty is saying, don't be too one side on either way, Just give room for some possibility that might happen. Something might happen, right?
I got hit with the perfect storm there. That's it. I still agree with you, Steve. Again, I don't know about poorly, but it definitely could have been better. I felt it should have been later last year. And once they let it go so long, and then, you know what I mean? It was a bit like, oh shit, now what do we do? And then at least you give them a little bit of a little leeway on that, because it just totally spun out of control for all retailers. Okay, SG&A improvements, exactly, Jordan. Yeah, some other things. I know Justin, some of these says
still relevant.
We're not gonna buying at a higher than its price, and we're gonna mess up Struts. Welcome, Struts.
Yeah.
Welcome, Struts. Struts is here to mess shit up. So you think Struts gives a shit? He came. He's here. Let's do it. Let's do it, Struts. Hell yeah. It's number 2 to buyback stop. 4Class. Welcome, 4Class. Oh, I'm confused by the buyback critiques. Debt at discounts. I'm not so not the buy. They couldn't have bought back immaterial amounts of the debt at discounts. I feel confident that there wasn't enough liquidity. That price would have got bid up fairly quickly. I don't know that for sure, but I lead in that direction. The stock buyback, I feel as though they yeah, I don't know. I just shared my thoughts on that. Insider buying, I agree with James on that. I would have always liked to see more. Hey, Space Burrito. Welcome. Time in the store. Saucy. That would be, what have they done to cause you to distrust them? That's going to be my response, because at this point, yeah, I lean in that direction. I'm not saying 100% sure. Hopefully, you, Super Saucy, you know how I talk and stuff. But what is it that causes you to distrust them, right? Because again, I lean on the foundation here is they have successfully executed up till this point. They haven't done everything perfectly. I've disagreed with certain elements strongly. Even Q3 left me wanting more, blah, 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 Super Saucy. But what is it that's causing you to think that they're not looking out for shareholders' best interest? Because if those items maybe we can agree, we can disagree about, right? Make it an easier conversation. Hopefully, I've talked about some of that stuff. Sorry, L. Can I please say at the market offering? Oh, I blew it, L. I'm so sorry, L. I'm so.
So, I think he's just trying to comment on the fact that he's reading his comment box here, and I'm sure back then people were mistrusting the leaderships and all that stuff, and it's still true to this day. Nothing changed, right? Can you imagine that 4 years ago? The same thing is happening again. There's always some bear cases out there that have their own view of leadership. And so it's up to you to decide which one. Oh, sorry, I thought my microphone was off. It's up to you to decide which side you're on, essentially. And if you're saying that leadership doesn't do something, that you expect them to do, then you have to be realistic about it too, right? What do you think they should do differently? I mean, they pay off debt, and people were like, they should have expanded. Okay, had they expanded their store back then, when they have all this money at the market offering back then, what would have happened? Have anyone thought about that? They would have still have those debt, and on top of that, expenses, right? What is it? SG&A going up like crazy. And so, is that what you want? No, of course not. And in this environment too, look, people are closing store like crazy right now because they were expanding like crazy over the 4 years ago. And not even worse, they would come to shareholders to raise more money, and when they raise more money, even worse than that, they just spend it willy-nilly, like Adam Aaron, like AMC. Anytime they have money, they spend it. They don't keep it for themselves. They don't keep it for the shareholder. And that's it's not the type of leadership you wanted, right? But again, you still have people until this day saying that GameStop leadership doesn't do shit. Okay, all right, well, this speaks otherwise. This money speaks otherwise. In my opinion, they're doing the right thing for 4 years already, and they will continue to keep doing the right thing for 10 years, 50 years, 40 years, however long Ryan Cohen's going to be in charge of this company. I don't know how far he's going to want to take this, but, it seems like this is his legacy. He wanted to do something that he could be proud of, okay? Again, that's why the company is run the way that it is under his leadership. And it's been staying true to that. And it's been increasing shareholder equity for 4 years already. I mean, from what? Let me see. 4 times already, right? 4, 6 times? Multiple. Okay. Sorry. I keep forgetting. I'm not like Moran's, because he remember all of the numbers and stuff. I'm like, oh, let me look. Let me double check before I speak. So it came from $1 billion to now $4-5 billion, close to $5 billion in shareholder equity. And you could argue whatever you need to argue in order to pacify yourself here. On the bear cases, saying, oh, because he take advantage of people who are buying into the stock and then dump it on them. Well, dump it to do what, though? He hasn't been wasting this money, buying private jets or anything like that. But he obviously seeing an opportunity to raise cash in order to do something with it, obviously. So just sit and wait and see whether he could increase shareholder equity even more in the next few years, right? At the very least, wait until the next quarter. How about that? You want to evaluate the company the whole fiscal year here. Don't just look at the last 3, consecutive, quarters and said that this is it. Understand that you have to at least give yourself a year, to evaluate any company. And so if you just look into this, oh, look, they're losing, and then, okay, you're selling out of your investment. Okay, that's fine. But then you're going to miss out on this, right? On this quarter right here. And this is why trailing 12 is much better, comprehensive way to look into things, okay? So if you look at a comprehensive way, they're actually, coming positive. I don't know why this number is like that, because if I add it, maybe they're accounted for something else. But if you were to add this and this and this, it's actually negative number. One second.
So let me look at this, L. Oh, my bad, L. I'm 8 deep. No, I'm kidding. Yes, yep, Jordan saying too. Yep, bit slow on stuff. They have failed every guard. Getting Reggie was positive too. Yep. Yep, urgency, and that was the big thing. Many of us called out when we were looking through this letter, that urgency aspect. Yep. Blessed, welcome, blessed. And that it is indeed, in Cohen potentially. We know they got to be working with Cohen. The question for me is like the timing of it. Does it get bumped a while? I just think everyone's incentivized to move quicker, but I think it may just be they're managing the situation. If that's, I get where you're coming from, Hugo. So L, when you have cash on hand, a positive 600 billion, you do not do a 100 billion. 100 100 million. I think the million. But L, what I would say is this. I would say these are the reasons you do it. And I agree with everything Jim Bell has said here. That's what I mean. You'd have to be saying Jim Bell is completely full of shit. But otherwise, this is a good reason to have an at-the-market offering right here. This is it. And specifically, he points to the upside first, which is very important, right? Again, if you know that you've done a good job, you feel confident in the balance sheet strength, your liquidity position, and that it is indeed an opportunistic move, that's what you lead with. That language. That's it. Full stop. Hopefully everyone agrees with that. If it's true, if it were true. And the second thing is, and L, is this second part. Like I said, I always want this at the market offering. I always want this in my back pocket, especially in light of what's happening right now with store closures in certain areas and everything like that. At the end of the day, it still does offer some downside protection just in case they ever needed it. Now, they make it seem like it's unlikely that they would need it, right? Again, Bell makes that clear. But to have an extra $100 million cash just in case if they needed to use it, there's not even any guarantee they do any of this stuff. But I think there are legitimate reasons for this, L, even with that much cash on their books. I do. In their forecast, like I said, I would have been okay if it was even more. The market might have been pissed if it was for more than that. But that's how I view this type of stuff. I really put a high value on optionality. Okay, so struts. Number one, I did not say it was all a result of management. I didn't say that this was all a result of management. In fact, Cohen's involvement certainly did have an impact of part of this price movement. There's degrees of urgency. That much we can talk about whether or not they're moving with haste and all blah blah blah. But as far as the upward move, all I would say is struts is Ryan Cohen doesn't have firm. He's a big investor in this, and yes, he's contributed to it, but he hasn't even come to some sort of a resolution yet, and that the price is continuing to get bid up. And is this because the market is expecting him to get more involved in stuff? And how? That's the thing. We've said this for many months. These moves are hard to parse, but when you're coming from a level of undervaluation, and the free cash flows are coming, whether or not Cohen's involved. I mean, the free cash flows are coming whether or not Cohen's involved over the next 12 months, 24 months. I mean, I don't understand how people who disagree with that have a different style of analysis, but Cohen is going to have a modest impact on what free cash flows will be over the next 18 months. And I continue to believe that what the free cash flows that they generate relative to the prevailing market cap will be gigantic. And that will drive the price in the market. What the market is, again, somewhat factoring in Cohen, but they are also factoring in those free cash flows that we are getting closer to and closer to. That's value investing. That's how this stuff works. And I do, by and large, believe that the market is buying into this stuff. And I don't think it's strictly Cohen. I think that the market sometimes is slow to come around to this fundamental thesis. How many of us had a thesis, a GameStop thesis, where Cohen wasn't even something we were factoring in? Like I said,
so this is important too. Like, again, it's still relevant until today. People, when they're saying, oh, this $4 billion doesn't mean anything. Really? The market hasn't even factored in what that $4 billion is going to do for the next 10 years. Like, what are you talking about? And so this is, again, very relevant. When I listened to last night, I was like, what the hell? How is it people are not listening to, again, he has so much wisdom in this. And again, you could apply it to the next, 20 years. The point is that the markets right now is giving you this price right here is for a reason. Okay, I'm willing to say that there's no manipulation. Let's just say there's no manipulation. This is the free market. Okay, there you go. That's the price that, people are willing to pay for GameStop right now. Okay, it might be lower tomorrow. Who knows? But the point is the price is where it's at because of the current state of the company, right? Hopefully, you could get a little bit better. But again, this is only 3 times book because the book value right now is close to $11 a share. Not even 3 times. Like, it's still under 2. My point is that, the market is slow. Like he was saying, it's slow to tell you what the future might hold. And again, to minimize that $4 billion in cash, it's the stupidest thing in the world. But if you believe in what the media is telling you to believe in, go ahead, just believe that. Just believe that $4 billion in cash doesn't mean anything. and then you'll be missing out big time.
For me, he's a proxy about that tremendous upside optionality. But I didn't even know who Cole. Like I didn't even know him. You know what I mean? And you may say, well, he's the only reason. I'm like, you know how many stocks I've been in where they just move up gradually just because the market is coming around to the story that I've been researching for quite a while. I know that's the case for many of us. Yeah, 600 million. Okay. Reason for urgency. Cohen divest. Yeah, well, I also agree that, to bless his, if Cohen walked, which I don't think is likely in the near term, that would have a short-term negative impact on the stock price. Long-term, it's the free cash flows. Yep, doesn't want them. Yep, many reasons that folks are incentivized. Yep, to move quickly. Yep. Talk about. I mean, if that's the thing. If he strongly disagreed with everything they were doing, and I don't think that based on this letter, but if he did, he would certainly not. He'd certainly want to get in there sooner rather than later. But this also begs the question: what the hell took him so long? What the hell took him so long? It's December. If you strongly disagreed and you thought they were ridiculous and the plan was absurd, I know he has built up his stake. It's a much larger position. I get that, but even still, it still begs the question. Yeah, what's their next move? Hyperbole Kid, welcome back. I do agree with this, Struts, that the console window to generate cash for the transformation is only open so long. So I agree with you, Struts. That was part of my reason for thinking I would hope we would have more by the end of 2020 because it's here. That was my basis, Struts. So I agree with you on that. And again, I just think, but if they did have anything, right, you could at least imagine that you have the at the market offering. Then you can, if there's any plans if they are going to reach a resolution with Cohen, that's ahead of them. If they were going to announce something, that's ahead of them. And then all the bad quarters are behind them. You know what I mean? It's like now you could go into 2021, boom, 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 boom. I'm not saying that's necessarily the optimal strategy. I don't know, but it's a path that no one's really taken seriously right now, and I think one should assign a probability to that, even if you don't think it's likely. Because if it ever did happen, boom, 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 boom. That's what I think. Oh, sorry, L. Oh, I see L's messages. Stop saying that to money. My bad, L. My bad. Oh, I disagree, Struts. Based on share price reaction to earnings, Sherman is not in the same ballpark. I disagree. How Struts, right off the bat, you're assigning too high of a weighting to short-term price action. That can not only, I mean, you can draw the wrong conclusion based on that. Struts, your point would have been valid on September 11th, where the stock price fell. You know what I mean? Like, you got to be careful with that overweighting that short-term price action. Just because it's sold off doesn't mean that Sherman's not in the same ballpark with Cohen.
Yes, see, the price action usually doesn't really mean much. Yes, I know it's fun to see those little things. Sorry, it was like getting a little long here in this video, but again, my point is that these still relevant till today's price point, and again, people are kind of look at the price action, and then they're just giving you a hard time to say that, or giving the company a hard time, saying that Ryan Cohen doesn't do much. Look at the price action. Look at this. Look at that. All right. Meantime, the guys is trying to build something, meaningful for shareholder, and I'm not saying all of the shareholder. I think the majority of people who are long-term investor minded. I'm just only focusing on people who are just short-term minded, right? When they see these type of price action, and again, this is where traders come in and they just troll on people who are just trying to, again, find ways to get into this company, at the price in which, it was traded at. Traders usually have that sentiment of, oh, this stock doesn't do shit, right? Or this company is a terrible company. Because when they trade it and then they sell the shares, like, for example, this particular Shenzhen here, I'm sure, people who doesn't know how price action work, they would, let's see, from here to here, how it's like 10%, right? 10% dip on 2 or 3 days right here. They would be like, coming to people. It's like, look, this company doesn't do much. Look at the price action. It doesn't, hold its water, and, it doesn't hold this level forever. Look at it. And then, at the same time, the people that are, over too enthusiastic about this company bought up here, and then they're expecting it to go, $100, on the upside. And then when it went the other way, they have a different sentiment here. So that's what I was saying, that, don't give the short-term price action any water. Yes, if you're doing option, obviously that's why you would be mad at this company for whatever time you have to be mad with. But the point is that, sorry, I'm trying to do something here. I just got a different microphone here, but yeah, I'll set it up later. Not for the computer, for my phone. We'll see. I'm trying to do something next year, perhaps with the new look of this channel. I don't know if I wanted to do it though. I'm still debating, you guys. So I know I'm not sure how many people are still watching, but if you're still here, God bless you. So let's go back to the price action here. What I'm trying to say is that don't put too much emphasis on the short-term price action. We know the trajectory of this company already, and so just stay here. Balance sheet could never go wrong. I know a lot of people would want you to not look into this company, but if you're honest about it, go search for it about yourself. Don't listen to the media is telling you this and that. Learn how to read all this metric right here. Yes, PE ratio. They'll pick and choose what metric that they want you to see, and the one metric that they always give you is, look, PE ratio is terrible. Well, it's a transition. It's in a transition mode. Guess what PE ratio it used to be? It used to be thousands. Okay, it used to be 400. Now it's 170. You see what I mean? Again, this PE ratio could come down so low that it'd be stupid for you not to buy it. I'm telling you. But by that time, you might not see this price ever again, because by that time, people are realizing it already. People who've been accumulating it little by little have been well positioned into this company, while you're still saying that this price is expensive in this company. I'm telling you, based on my analysis on a different type of metric that I go by, and that is book value. Okay, price to book value is only 2 right now. And on top of that, I know, like, just because it's low price to book ratio doesn't mean anything. I mean, other companies have lower price to book, but they don't have the leadership that we have. And so you have to look at everything here. Okay. Marantz did a segment on Macy. So Macy have 1-1 or something like that. But again, the leadership was terrible, right? The debt prospect is terrible. The operational cost is terrible. They're too big already. They have too many problems to deal with. So companies like GameStop has its trouble 4 years ago, and we already solved it, in my opinion, right? So Now it's all about expansion, right? Growing slowly, but maturely. Again, leadership is not going to leaps and bounds. Okay, don't expect Ryan Cohen to build a rocket tomorrow. We can with that money, but why would we, right? Why would we risk that when SpaceX is already doing it? Look at this debt to equity ratio, perfect, amazing. Okay. This one, yes, we want it to be below 1. It's coming. It's coming. Just so be on the lookout for that one. Let's see what else. Current ratio 5 times. That's amazing. Okay. Quick ratio 4 times. That's amazing. Return on investment or return on equity. Okay, 2%. It could be more. It's going to be more. Okay. In the future. Right now, cash flow is negative, but again, that's ebbs and flow of the operational costs. So we're addressing that. I'm sure we're going to close a few more stores, and then we're going to be fine, just fine. We already did, right, in the European sector. It hasn't come to this particular earnings report. The next fiscal year is going to be the one. The next quarterly report's going to be on that one. And so this is going to address very, very soon, next quarter. Again, this is how you project ahead of time without, knowing, without seeing this number and then just drop your investment right then and there. Right now is what you see. And so the future is still yet to come. So your job is to detect the trend. Is it trending the right direction or it's trending the wrong direction? Depends on what you're measuring. Right? So inventory turnover is very good. It used to be 6, now it's 3. Is that a good thing? So inventory ratio, how many times has been sold and replaced during a period? Okay, cost of revenue divided by average. Okay. I think that's a good thing, right? Inventory turnover is very quickly. Or is it slower? Hold on, let me look at Best Buy just to compare. Sorry, you guys, like this live stream is so long. Okay. Am I? Okay, inventory. So which one is better? So this is 4. Inventory turnover. Let me. Sorry again. Try this. Okay, so company inventory turnover ratio can be varied in industry, but a ratio between 4 to 6 is usually considered a healthy for retailer and e-commerce business. A higher ratio indicative that the company is efficiently okay. While lower may suggest that overstock or weakened sell. Okay, we could address that. That's concerning a little bit because we are under 4 right now. Perhaps this is why we are lowering the amount of inventory that we have right now to get it back to 4, between 4 and 6 again. So let me look at this. So the perfect ratio would be between 4 to 6. We are at 3.4 right now. Like I said, we used to have 6 right there. And so perhaps again, the product doesn't move as quickly. as we intended. That's why if you were to look into the finance here, go to inventory, balance sheets, inventory right here. Compared to last year, we were oh, okay, so we did increase in inventory. Right. Wait a minute. I think this is annual. No wonder it makes no sense. Okay, so quarterly right there, inventory is lower than this one. So I'm sure we're trying to get to achieve that between 4 to 6 inventory ratio. So yeah, they're adjusting it accordingly based on the amount of stores that we have, the amount of items being exchanged in hands. So yeah, I mean, again, this company doesn't have to do anything in order for them to make money here. Let me see if I have anything else. I think I might end it here in a few minutes here.
Too much options for you. Cheers, Al. I mean, true that, right? You're thinking about that stuff more than you are that an at the market offering, right? Of course. You know well, you know. Yeah, they're skeptical of the revenue, right, Steve? They're skeptical of it. Yeah, so I agree with you. So this is fair, Justin, talking about maybe they're being strategic with the transparency. So I was a big proponent of that too, Justin, like you. Same after Q2, I'm with you. So we're right at that line, Justin. I agree with you because I was thinking that same thing where it's like, okay, I can kind of see this as long as it comes in the next one. And then Q2, I'm sure, I don't remember what I said, but I think a lot of us were like, whoa, we were kind of hoping for some more. We didn't get it. But again, even as I was like, I'm with you, Justin, where I'm like, well, wouldn't that be sick if it comes at Q3, the consoles or whatever? Then we didn't get it. So like I said, with each passing week, month, quarter, I have to discount it. Hands are tied. I have to discount the possibility that they have anything. But well, I wouldn't. So not so much an excuse, Justin. But if it were strategic, that's what I'm getting at. But indeed, I'm not saying that's definitely it or anything like that. I'm just saying, just imagine. But because this sticks out to me. This language. At the market, who thought that they would announce something like this a couple of weeks ago or a couple of months ago? Nobody. Even I'm like, what the hell? So I'm not so sure it's an excuse, but indeed, and I wanted more too. I wanted more of that conference call. I mean, I would say, I mean, certainly, if it didn't happen. I mean, I've been talking about how Q4 and Q1 and Q2 that can break my thesis. Certainly, if we got the Q4 results and we didn't have anything material besides that Microsoft partnership, well, holy shit, what the hell? You know what I mean? Like, certainly. But I know for some people, like, well, that's too far off. But even I'm like, okay. Yeah, more plans. I want to see, but we want to seriously model that upside. Need more change yesterday. Missing a clear roadmap. Indeed, even if they're working on the right things, right? If it's scattered about, there's no abundantly clear roadmap. I mean, for those requesting it, a la Cohen. I mean, I'm not sure that you're gonna get it. Like, again, I'm not exactly sure how much of a roadmap he's gonna get at this point. You know what I mean? Like, we'll see. See, the lack of guidance wasn't disappointing for me. I thought it was unlikely. They said they weren't going to offer it. Oh, I got their deck right here. Super saucy. Yeah, so Steve Stock says good management lays out a specific plan. I don't know. I mean, they lay out a clear plan. Generally, you don't want to get too much into the specifics. But indeed, you want more. I'm with you on that. Yeah, so I do agree with that, Steve. It was kind of a bit of a stay tuned. And that's what some people didn't like, right? And I was disappointed by that as well. But again, if All right, let me keep going. Yep, omni-channel. No. So, taking a more omni-channel itself isn't a strategy per se. Super saucy, as in like a transformational type strategy. However, super saucy, I would disagree that. Well, let me just reframe this. Super saucy is that I think that if they kicked ass on a general omni-channel front, if they crushed it e-commerce and they had an in-store experience that excited people, even if there wasn't any crazy transformation, I think there's a place for a GameStop. I think there's a place for GameStop here. It's very similar to that Chewy story. Do you know what I mean? And in that light, I do view it as a bit of a strategy. It's not super sexy or anything like that, but I would say that they seem to be executing on that front. And for me, that's an important thing. I was just naming a couple of them right off the bat, right? It's not some huge, super sexy thing, but worth mentioning. Among a lot of the other things that people just mentioned in the chat, I think I'm just getting caught up now. But I thought many of those were good as well. Just off the cuff type stuff. Cyberpunk. Hey, Eduardo. Welcome, Eduardo. Oh, shit. Uh-oh. It jumped. How far behind am I? I just missed some stuff. I apologize, everybody. My bad. Cruise control. Hey, yo! That's where I'm picking up. Oh, James said Cohen has lots of time. I mean, in theory, he does, right? But I think he's incentivized to move fast. We'll see. So Rigo, just to be clear, there's been no dilution. This is an option. But that said, I agree with you. If there's some huge upside, it could make sense to do more cash, and maybe they will down the line. But maybe they just start here. I don't know. Johan, good evening, Johan. Welcome. So Polygon asks, is a resolution with Cohen likely after that letter? Cohen name dropped Sherman and basically called him. Yeah, so Polygon, I had that same take where I'm like, whoa, I wasn't expecting this aggressive of a letter for a first pass. So I too was in that same. I don't know if they could, but if it did happen, you know what I mean. But it does discount the possibility, but I don't think it rules it out. Eric, welcome. Oh, Eric was eyeing 12. Okay. Didn't quite get there. Got real close, though, huh? Yeah, real close. Hey, maybe it comes yet. We'll see. If it breaks the trend, then we get a reason to look forward to that. Zalors, welcome. Management team left over hand. What's next? Omnichannel. Omnichannel. Oh, Foxed. Cheers, Foxed. Oh. Thank you, Foxed. Huh? Whew, we got one.
Sorry about that, you guys. I was just doing something else. But anyway, was listening to him and all that stuff. But anyway, if you want to listen to that particular live, I'm so sorry. I will cut this part off. My point is that be rest assured. Okay, so let me end on this point right here, just in case you're still here. So company is doing well, right? And I've noticed something here, which is in my description or thumbnail, whatever. So it seems like they have the exclusive item on Pokemon cards. So they probably have some exclusive here, meaning that only GameStop would hold this. So my point is, leadership has something planned here, and they're able to give something for everyone. So to I know like they have they have 3 reviews already, and it's kind of mixed review. So I don't know what this is. Again, I'm not a collector, so if you are one, go ahead and understand where to get your collecting items. GameStop's gonna be the leading one, trading cards and all that stuff. So yeah, go crazy, go have fun. But anyway, sorry about that. I should have ended the stream a little bit earlier, but I was just reading on the microphone here that I just got. But anyway, I will let you go and I will be back.